I'm Cynthia Rowland, and this is episode 96 of EO Radio Show. This is the third in a series of episodes studying financial fraud at nonprofit organizations. With the expert insight of Sly Atayee, a director at national accounting firm BDO USA, and a certified fraud examiner, we continue our discussion following the previous episodes, where we were looking at real-life case studies of fraud at nonprofits and some concrete steps an organization can take immediately to mitigate fraud risks. In this episode, we wrap up our discussion on fraud prevention techniques with a close look at building an effective system of internal controls. Our last episode in the series, Ask a Certified Fraud Examiner, will also answer listener questions sent to our mailbox at EO Radio Show. Welcome to the EO Radio Show, your nonprofit legal resource. Brought to you by the Exempt Organizations Group at Farella, Braun & Martel. My name is Cynthia Rowland, and I'm a partner at Farella. I'm a business and tax lawyer with more than 30 years of experience advising clients on nonprofit and charity law. Through this podcast, our lawyers and guests will discuss a range of legal and business issues impacting the nonprofit world because we understand you work hard every day to make your community a better place to live and do business. Many of our programs focus on the basics, and at times we'll do a deep dive into narrow and complicated legal issues. Again, welcome to the EO Radio Show. We're glad you're here. Today, I'm delighted to be joined again by Sly Atayee for the third of our 4 episodes where we study financial fraud in nonprofit organizations, looking at what happens when fraud is uncovered and then studying effective techniques to prevent fraud in the first place. Sly is a director at BDO USA, and his work focuses on assisting exempt organizations with various aspects of forensic analysis and investigations. BDO is an international accounting firm that delivers assurance, tax, and advisory services to clients throughout the United States and around the globe. Sly has led numerous forensic analyses for exempt organizations, including fieldwork domestically in the United States and internationally in Africa, the Middle East, and Asia. He regularly supports his clients with forensic investigations, financial process redesign, fraud prevention and mitigation, internal control assessments, complex cost recovery calculations, and policies and procedure development and support. Sly has experience supporting litigation matters, substantiating costs through the collection of supporting documentation, and performing data analytics in order to calculate and quantify losses and damages. Welcome back to the show, Sly.
Thanks for having me back, Cynthia. Really excited for this next episode.
Yeah, so today we're going to talk about fraud prevention techniques in general and their special application to nonprofit organizations. In the last couple of episodes, just for listeners who may not have heard those, we talked first about some case studies, which were truly frightening and interesting to hear about, but glad they didn't involve one of my clients. And then we talked about some specific steps that organizations could take just as immediate reactions to concern about setting up a framework within the organization. But today we're going to talk big picture. We're going to talk about designing an overall system and what a framework for effective fraud risk management might look like. So, Sly, why don't you start us off with that conversation? How do we dive into this topic?
So, if you've been following along with the episode so far, we've kind of worked backwards, right? We started very specific at case studies, and we looked at a couple of specific issues that, our past clients have had. Then we took a step back and said, okay, what are some immediate actions that an exempt organization can take to try to avoid those situations from happening? Now we're taking another step back and saying, okay, well, if we think about the broader framework that an organization needs to put in place to prevent or detect fraud, what does that look like? We talk about the fraud cases and, what can I do today to prevent fraud? But then the framework is a really important level to think about this at as well, because you need to make sure you have the right fundamental pieces in place. If you don't have those, you're going to see things that, fall through the cracks later on that turn into the issues that we talked about that, again, our clients face from time to time.
A lot of this is the stage in the life of the exempt organization. A founder of a nonprofit never thinks, okay, when I've got hundreds or thousands of employees, what's my fraud prevention philosophy going to look like? How am I going to put a system in place? And so I can see how, especially really vibrant organizations that grow quickly, the potential can really outpace the board's skill set and ability to anticipate these things. So lead us down that path. How do we start thinking about it? What are some of the best practices? What do the best thinkers think about when they are certified fraud examiners and they want to help that organization that perhaps has a lot of risks to manage and needs a starting place?
Yeah, so today we're going to talk about the most commonly used framework, I think, for nonprofits, but for other types of organizations as well. And this framework is called the COSO framework for short. It actually stands for the Committee of Sponsoring Organizations of the Treadway Commission. And I promise I'm not going to say that again because it's just a mouthful, but we'll just call it COSO for now. COSO it's essentially a framework that's put in place as a foundation of an internal control system. And again, a control is any sort of step you have in place to mitigate a risk. And obviously fraud is a risk. And so COSO is a system of controls that you put in place to mitigate all types of risks, including fraud risk. A quick background on COSO. It didn't really come back into the mainstream until the early 2000s after the Enron scandals and after the SOX Act was passed. And organizations were actually required to have some sort of framework in place from an internal control perspective. And then, for exempt organizations, although SOX generally, for the most part, is not applicable to them, there are aspects of SOX that are applicable. And there are other things that are more best practices from a governance and accountability standpoint. And having a good system of internal controls is one of those as well.
And just for listeners who may not be familiar with the acronym, SOX is the Sarbanes-Oxley Act. And I don't remember the exact date of that either. But where Sarbanes-Oxley definitely applies to nonprofits is that organizations can't retaliate against any whistleblower who raises a matter of a violation of federal law. So it's very much relevant. And even though many aspects don't come into play with a nonprofit, it has had the wonderful side effect of creating these frameworks for addressing fraud. So interesting that Sarbanes-Oxley brought a whole new level to internal controls.
Yeah, I think it was whistleblower protection, then also document retention. Those are the two big aspects for exempt organizations from a SOX perspective on what's applicable. Yeah, so in terms of COSO, I think the easiest thing for us to do today is to COSO is broken up into 5 principles. And basically what we're going to do is we're not going to go through each principle in depth, but I'm going to give some examples in terms of what that principle is and what's important about it. And then what are some actual things you're supposed to do within that principle. Again, some actionable steps that apply to pretty much every organization. And so we'll start from the top level, which is called the control environment. And this is essentially, as you can imagine, it's your environment of your controls. This means it's the ethical integrity of your organization, it's the tone at the top, it's the policy and procedures. And you might ask, well, how are these things relevant to fraud prevention? So tone at the top, for example, is one of those things that you don't see. It's not a reconciliation, it's not someone counting cash, but it is individuals within your organization leading by example. And I think I like to relate this back to the fraud triangle. The fraud triangle is broken up into 3 elements. So it's motive, opportunity, and then rationalization. Motive and rationalization are 2 things that your organization doesn't really have a big hand in, right? It's kind of hard to control those things from your employees' perspective. But opportunity is the one that I want to key in on. I think that's an aspect or a step that your organization does have some control over. And I relate that back to 2 questions an employee will ask themselves when potentially committing fraud. Is this right or wrong? And will I get away with it? If you don't have a good tone at the top and you don't have that good environment in place, they might not ask themselves that first question, is it right or wrong? They're just going to ask, will I get away with it? And then that second question relates back to, do you have strong internal controls? Are your controls good enough that that employee thinks they actually might get away with it or not? That's how I like to think about it, in that essentially taking away that one question from that employee, because they're not questioning whether this is right or wrong. Their management hasn't established a strong standard of ethical integrity. Maybe management looks the other way when employees do certain things that are not fraud related, right? But if someone's not complying with policies and procedures, for example, and the management's not really enforcing those aspects, that can weaken your control environment as well.
I see many nonprofit organizations, they of course have a conflict of interest policy, but then at a higher level, often a code of conduct, which is even less defined, and there's not boxes to check, but it's a statement of organization expectations.
Yep. Yeah. And those are the 2 things that I want to focus from a control environment perspective. There's the tone at the top. Again, it's kind of the more intangibles and how people behave. Then there's your policies and procedures. So what's actually documented on paper. But again, both aspects are important because one is just a piece of paper. The other is how people actually behave. And sometimes those two things are not necessarily aligned.
That makes sense.
All right. Focusing on policy and procedures, the reason why that's super important is because that's how you're essentially telling people how to do things. It puts you in control over how processes should look, including designing and implementing internal controls. That's how you can tell people that you want segregation of duties to happen, for example, at the process level, because you're writing it down and then saying, here's the procedure on how to do this process. If you don't have that and people are just doing whatever they think is best, you've lost control of that process now, right? There's no guarantee that those controls will happen, which increases the risk of something bad happening, such as fraud or even just other generic like errors.
That makes a lot of sense.
The next COSO principle we're going to focus on is risk assessment. So I think this kind of goes without saying. Obviously, it's an organization assessing its risks and doing so on a continuous basis. Obviously, an organization can have a lot of different types of risks, and fraud risks are just one component of that. But you want to make sure that the risks you're assessing are specific to your organization. If your org is handling a lot of cash, you want to make sure that you obviously have some good steps in place, some segregation of duties, so that it's not just one person collecting all the cash and then making the deposits. If your organization doesn't have those steps and doesn't actually collect any cash in person, then it's not as big of a risk to you. Your risk assessment really shouldn't be keying in on that. The next COSO principle should be control activities. These are the actual control steps. These are the individual control steps that your organization is going to put in place to mitigate risks of, again, fraud or error or other bad things from happening. One key practice here is designing controls that mitigate the risks that we talked about in the last step. You do your risk assessment, then you design the controls that mitigate those risks. And there's a thing called a RACM, a risk and control matrix, where literally you put it together in a nice organized Excel spreadsheet, and then you have it, across a horizontal line and say, here's risk A, here's control A that mitigates risk A. And so it's a very practical way of looking at it. But obviously, if your organization is a massive organization, you're not going to be able to do that for every single risk, but you could at least do it on key risks. And then those are key controls that are mitigating key risks.
Sure. And you might get to this later in your outline and what you're thinking of, but what that brings me to think about is like the international organizations that have activities happening all over the world. So it might be the same activity everywhere. The relief aid is sent to all these organizations. And so the risk might be that people steal it and sell it and it never reaches the end user. And so that risk is happening everywhere, but there might be maybe unique features in different countries or something like that. And so I like the idea of the matrix because I like matrices anyway, matrices. I like to organize thoughts that way. But that seems like an ideal thing to say, okay, across the organization, this is one place where we know value could fall out. This person over here is going to be responsible for the actual control activities along that on a particular line, maybe.
Yeah, I think that says a lot about you and I, about us both liking matrices, and it makes sense why we're in the line of work that we are.
It does, doesn't it?
That's a great point. Like an NGO, an international organization's risk register is going to look way different from a domestic healthcare exempt organization, right? So
sure,
it needs to be specific to your org specifically because those risks might be unique to you. So next would be information and communication. This is the next COSO principle. This relates mostly back to detection, right? So we think about fraud. We think about fraud prevention and fraud detection. Prevention stops fraud from happening. Detection would catch it later on, right? And hopefully pick it up before it's gone for too long. Information communication relates to literally information flowing within your organization and then also externally as well with stakeholders or auditors. Key elements here, and again, what we see sometimes organizations not having, is making sure that there's updated or accurate reporting that happens within your organization, and that's happening on a timely basis. If people are receiving accurate and up-to-date reports on a frequent basis, they have more information that might help them detect fraud more quickly. You also want to make sure you're tracking red flags or things that you'll indicate as red flags as KPIs in your monthly or quarterly reporting to try to flag some of these things before they've turned into larger issues. If you're starting to see invoices go unpaid for a long time, if you're starting to see travel reimbursement kind of build up a large outstanding balance, if you have certain vendors that are not paying you, like those are all kind of indicators that you want to flag within your reporting that should eventually go to your management so they can escalate that even further if they need to do some investigation. This also relates back to your whistleblowing as well, right? It's the transfer of information within your organization. So obviously whistleblowing is a very important mechanism for your organization to have so that if there are fraud cases or someone has suspicions about something, they have somewhere to report that. That information can flow to the right place and then it can be investigated in the right way.
And that whistleblower policy and actually being active goes back to tone at the top.
Exactly.
We really do believe in this and remind people that it exists and that they won't be retaliated against and things like that.
Exactly. Yep. And then document retention. We talked about how SOX relates back to exempt orgs from that perspective, but it's also a good fraud prevention tool too, because you want to make sure that you have documents to support all the expenses, all the processes that you've had to go through to, book financial transactions and so on and so forth. You want to make sure you have strong document retention. And so you have a good audit trail. You can go back and find the support for expenses. Lastly, in terms of the COSO principles is monitoring. And there's a couple of key aspects here, but monitoring is basically after everything else is in place, you're keeping watch or keeping oversight over the entire control framework or the control system. You're assessing your internal controls that you've put in place to make sure that they actually work the way that they're supposed to. But then you're also assessing for execution of those controls. So you want to make sure that people are actually doing the things that you wrote down on those pieces of paper or I guess your PDF. This is super important because if you, like we talked about in control environment, if you have a policy or a procedure, but you don't actually enforce it on the back end, it's just a piece of paper. And you can spend as much time or money as you want writing a fancy policy and procedure. If you don't have an enforcement mechanism later on that people know is coming and people know that there's going to be checks coming, you have no leverage. You need to make sure that there's a process in place to enforce the rules essentially that you have established in your policies and procedures. You also want to make sure that like if you're an organization that's a larger organization, you'll have some sort of internal audit function that usually does aspects of this for you. But a lot of smaller exempt organizations don't have internal audit. You can get away with that, or you can do a workaround in terms of doing spot checks. It's not going to be a full-blown internal audit, but just a couple of expenses here and there within certain buckets that you've identified as high risk, you could pull those out. Or let's say you just wrote a new policy or a new procedure last year, and it's 6 months later, 10 months later, you want to check that people are actually following that policy and the new controls that you set up in there. And so you pull a couple of, let's say, subcontractor contracts to make sure that that was put into your CRM system, for example, and that's a control you had in place. Pull a couple of transactions, make sure that it actually happened. Shouldn't take you more than a couple of hours, but that way you're enforcing the policy you put in place, and now you've created this mechanism, and that monitoring is really like what kind of closes the loop on your control system, where you have the control environment, which is your foundation. And I know no one can see my hands on the podcast, but I'm doing this with my hand. I'm doing like a foundation symbols with my hands. And then you have obviously your risk assessment is the next layer. So you know, like what could go wrong. You have your controls that you design on top of that to say, okay, we know what can go wrong. Let's design controls to mitigate the risks of those things going wrong. Information communication kind of flows within all these other different principles. And then monitoring is that final layer in the top to make sure that, okay, we put all these other things in place. How do we tie them together? And how do we make sure that people are following the rules that we have established for them?
So that's a really good way to think about it. It brings a whole philosophy where all the pieces fit together. So do you want to tie some of this back to our case studies? How would you imagine them playing out in the real world? Because if for your case studies, I'm guessing there was a failure at one or more of these levels. I mean, maybe they didn't have any of it in some of those situations.
Yeah, in some cases, I think at the most egregious level, organizations don't have policies and procedures. And so how could you expect things to be done on a uniform basis and as you expected when you've never given that direction in the first place? But then at a level up from that, an organization does have policy and procedures, but they don't enforce them. So again, it just becomes kind of a piece of paper that no one really takes seriously because they know that there's nothing coming down the line that's going to check their work. Also, in terms of doing risk assessments, I think Some organizations do them. Some of them do them at a very high level that makes it hard to understand what unique risks are to your organization.
So that's a great overview of the COSO principles, Sly. Any final tips, any closing remarks for our audience?
Yeah, I mean, I would say, again, we did this a little bit backwards in terms of the episodes, but, start with the framework, make sure you have all the core elements of those frameworks in place. Then, once you have those in place, or if you think that you already have those in place, look at some of those really effective fraud prevention mitigation strategies that we talked about in the last episode to make sure that your organization has those in place or some aspect of that, right? So like for example, we talked about educating your employees on whistleblowing. So it's great that you have a whistleblower policy, but do people know about it? And then, learn from other organizations. So I think study case studies, listen to podcasts like these, and try to understand like how does fraud look in some cases. And I think you can use that as training points to your employees as well, so that you can make it real. When you talk about controls to people, some people just get kind of bored to sleep, right? You want to make it interesting, and then kind of like we did here, which is bring up a real life example and say, hey, look, this other organization had these gaps, and then they had those gaps come into reality as an actual fraud instance.
How about other resources for our listeners who want to dive more deeply into this? Are the COSO principles are they available on the internet, or are there learnings or links to other articles that you can drop into the show notes?
Yeah, so I'm going to drop into the notes the actual link to the COSO framework itself. It was updated in 2013 as well, so there's a more updated version. And then I'm also going to copy a link to the fraud triangle as well, so people can kind of see that and educate themselves on that. Both are super helpful resources in just understanding kind of the theory behind controls and how they should look.
Then for our final episode, just as a teaser, listeners who have particular questions can send in their questions for our certified fraud examiner. That's our Sly. And we will close out this discussion with one final episode that talks about some real world questions that people have. So Sly, I can't thank you enough for going through this again. I had no idea about these COSO principles, so I've learned something new today. This is terrific.
Yeah, I really appreciate the opportunity to come on here, and I'm excited for our final episode.
Great. So that's all for this episode. Be sure to check out the show notes for the links to the resources we just mentioned. Also, Farella, Braun, and Martel has a YouTube channel with organized playlists for the Nonprofit EO radio show past episodes, and those playlists make it easy to find information on the topics relevant to you. I'm Cynthia Rowland, and you've been listening to EO Radio Show, your nonprofit legal resource, brought to you by the Exempt Organizations Group at Farella, Braun, and Martel. If you have questions for our certified fraud examiner in our final episode, please send us an email at eoradioshow@fbm.com. That's eoradioshow@fbm.com. Thank you for joining us. Until next time, make a difference.